All right, welcome back to another episode of More Than a Mortgage. We are delighted to be here today with you guys, and I'm here with Tom Merritt. Tom,
Happy New Year.
Happy New Year. I guess we're already into February, so you can still say it till the end of February.
Oh, was that the rule?
And then after February, it's a happy spring.
That's all right. Happy spring almost.
So we got that going on, and New Year, and it's a new buying season.
I think that's kind of why I said the Happy New Year, right? Because for us, it's starting with this purchase season, the buying season, and everyone always talks about it being the Super Bowl is kind of the kickoff to the purchase season. So it's kind of the new year for us. It's crazy. I'd say almost 50% of our business or people purchasing happens within pretty much the second quarter, which is April through June. So here we are gearing up.
Here we are. I mean, it's February, and we got the Super Bowl coming up, and that's always the magic line in the sand. So
that's right.
We'll see who gets in there, but we're not quite sure just yet. But look, if you're thinking about buying in the spring market, you're not just buying a home. You're competing against a lot of different offers, and so I think that's what a lot of buyers don't understand, especially like your first-time home buyers coming in. They've never done this before, so they don't know what to expect. And so, one of the things that we've talked about a lot on this show is that being prepared, whatever market you're in, being prepared for that market is key. It's a key component of buying real estate in the United States, especially in Chicago.
100%. And I think that's why I'm so excited about this episode today, just from the standpoint that it is all about the preparation, putting you in a great position to basically accomplish your goals. Yeah. And we've talked a lot about goals over the past few months, and home buying is one of those goals, and being prepared is going to help you achieve that. And that's what we're going to talk about today.
Yeah, this is an emotional process. And so like when you get in there, it's you find out inventory is tight, you find out that, hey, I'm falling in love with this place before I even own it. It's probably one of the biggest mistakes I see buyers making is they get out there, they see a place, a realtor takes them around, and they hone in on that one, and it's like the holy grail just came down, and they're like, wow, like I gotta have this place. This is the one I want. And so, I'll tell you a story about falling in love with the place before we get off today, but it's my number one rule of thumb is do not fall in love with the place until it's yours. It's a big mistake because a lot of this process is mental. It's about keeping your emotions on the sidelines while you're going through this, and until you have those keys in your hand, you gotta stay focused and stay prepared and remember what we're going to talk about today in our episode, which is tactics and strategies that we show our buyers on how to win in a competitive market.
Well, I think you hit two key points right there. It's not yours until you have the keys in your hand, number one. And number two, I think is being prepared. And part of that is working together as a team with everybody involved. And there's a lot of key pieces along the way, whether that's your agents, obviously your lender, even your attorney and inspector to a certain extent, and working together just to make sure that you do get to the point where you have the keys in your hand.
Yeah. Well, and it's one of the first things. I'll tell you just a quick story. My wife and I bought, I think we talked about this before, in 2021, and we were all set. She was set on this place, and before we even had a chance to get through the inspection, the sellers canceled on us and wanted to go with a higher offer. Now, technically, they can't do that, but she was devastated, right? And I didn't realize it until I got home that night, but she had already seen us in that house, and she had seen us, like our family there, and it was a mental block for her where she wanted to pretty much call the entire search off.
That's tough.
And so I had to remind her, kind of one of the things we touched on at the very beginning of the whole search was we cannot fall in love with the place until it's ours, right? And so for those of you out there watching today, I mean, that is like, spring market 101. It is going to be competitive. You're going to have a lot of competition out there. I just looked up some stats this morning, and Chicago's inventory is not getting any better. I think it gradually will over time. But the reality of it is that we just don't have a lot of building going on in the city. There's not a lot of new inventory created. So when you see a seller put a place on the market, you think to yourself, that's more inventory. While it is, it's generally a one-to-one trade-off. They're buying something else. So it's not like we're seeing a plethora of new inventory coming in the market right now.
And again, that's kind of the difference between the different seasons as well. And every season has a little bit of a different feel. And I think that spring market, there's definitely additional inventory. You're going to see more things come on the market, but there's also a lot more with regards to the competition. And that's where you mentioned earlier the emotions get going, and people really get invested and maybe make some decisions they shouldn't if they're not ready to go and really have their ducks in a row so they know what they're looking for and what they want.
So for the listeners out there, like, why is the spring market? Why is it like a more competitive market?
I mean, I think there are a lot of different reasons. I think the number one reason is it coincides with the end of school. And when you think about that, there's two things. One, just for families and things, they don't want to move in the middle of a school year. But also for all people coming into the city, all the new people graduating from college, that happens in May. And so most of the leases that are written are basically going to start in May or June. And so that's when they end. And so when people are deciding they want to purchase, more than not, they're going to line it up with when their lease dates end. And the majority are May and June.
Yeah, and that's why sellers know the demand is strong around that time. So so the key to all this, it starts with the preparation, and it starts with you hear that term out there, pre-approval, thrown around quite a bit. In our industry, I would say pre-approval is like a very loose term. What does that mean to you? When a buyer wants to calls, hey Tom, I want to get pre-approved. My wife and I are buying a house together. What does that look like to you?
Well, first, let me state, not all pre-approvals are created equal. They're
the truth.
definitely different from place to place and where you go. Entering your income or what you believe your credit score is into an online application and getting a pre-approval is not what I would call a pre-approval.
It's a pre-qual. That's technically a pre-qual, which we see a lot where nothing's reviewed. It's just you punch in your data, it spits out a letter for you, and we see that all the time where buyers are going and push button, shoot rocket, get mortgage.
100%. And a lot of times, more than not, end up disappointed because you don't understand what that monthly obligation looks like, don't understand what they're taking into account, even some of the different options that might be available to you, whether it be as a first-time home buyer, whether it be just for the benefit of creating return on your investment or creating wealth, which at the end of the day is really, as we've talked about in the past, one of the goals. We want to make this one of those events or opportunities in your life to help put yourself in a better position both now and in the future. Yeah. So pre-approval to me is really having a trusted individual sit down with you and take you through the lending process and explain to you what it looks like and how it fits into your goals, both from the lending perspective and making sure that it fits into that box, but also from your personal perspective. So that at the end of that pre-approval meeting, which you should have with everybody that you would get pre-approved with, you have a thorough understanding of what you can afford and what that means to you in terms of a payment on a monthly basis, money out of pocket when you're closing, down payment, and so on and so forth.
I would even take it a step further. I mean, we're in a heavy condo market. So
sure.
Talking about in that meeting for us too, I think we talk about some of the pitfalls on buying condos, things you need to look out for.
Be aware of.
Like if you walk into a building and there's scaffolding up everywhere and there's signs on the elevator that says do not enter, you might want to call me.
Yeah. Well, and I think what most people wouldn't know and don't know is that they're higher risk. And as a result, generally speaking, they're going to be higher interest rates as well. Yep. And so there's a reason they're higher risk. And so you need to be aware of why that is and how that's going to apply to your
specific. Not just planning from because it is a big component is planning for their finances and their goals and getting them set up. But also, I think what people don't think about and why they don't sit down with somebody to go through this process is beyond me. But sitting down with someone like me or you or just any reputable professional in our industry that lends money on properties is, what do I need to know? What can I expect during this process? I know I'm going to go out with my realtor and I'm going to see houses, but is there anything else that I'm missing here? And I think that's a big misconception when you're going through and buying a home is that planning process, that sitting down, that talking through the pitfalls, that talking through the things that can and can't happen during this process talking through the strategies that we're going to talk about here in a few minutes. I think that's like the key to like anybody and everybody winning in this environment.
There's an art or a science to this process. And I think the sooner you understand and recognize it, the better off you're going to be if the goal is to become successful at obtaining a new property. And so those strategies, that process to get yourself in the position, starting with, as we started this whole podcast with, the lack of emotion and understanding that, listen, we need to go through these certain set of steps in order to get us to what our desired outcome is the first. And then understanding the strategies that it's going to take to get you, to the finish line.
Yeah. And guys, the goal is not to like go through the motions on the pre-approval and wait an entire 2 years or 3 years. It's a lot of work on your part. It's a lot of work on your agent's part. And it's a lot of work on our part too. I mean, the goal with that sit down meeting and discussing the plan is to get you in sooner versus later, because you go by a whole year and next thing you know, prices are up 10 to 15%. You go by 2 years, they're up 30%. You don't want to be in that position.
No, and I think, and understandably so, because they don't do it every day, is most think that you show up at a property, you like it, and you just say, okay, I'll offer you this amount. And the reality is there's so many other little pieces of the puzzle that go into that, that again, part of the whole pre-approval process is helping make you aware of what those are, so that when you get to that point of ready to make that offer, you also understand what all those little pieces of the puzzle are.
Totally.
Appraisal contingencies, appraisal gaps, as is, all those types of things where if you're just brought up when you start getting emotional with the place that you want, it's just a blur and it doesn't register.
So you go through, you meet the client. One of the big things that drives me crazy is, and I tell my clients this, I want to know when you're making that offer.
100%.
Like, I can't tell you how many times like a weekend goes by and, I check in and I say, hey, how's your search going? And you guys had any activity about out there looking? We've made 4 offers already.
Oof. And
I'm like, why haven't we talked on any of those? Well, we were just throwing an offer out there to see what happens. I'm like, guys, let's back up a minute. We talked about the importance of getting me involved. The reality of it is lender and realtors just don't think the same. Like they're not thinking like structure. They're not thinking about things that you could potentially do to sweeten up your offer. Sometimes sellers are looking for a specific thing that you're not offering because you're not asking the right questions up front, right? So it drives me nuts. The key to all this, in my opinion, and where I've had the most success with my clients and my business partners I work with, my realtors, is the collaboration.
100%.
Everybody's on the same page. We get done with that meeting in person. My realtor knows what all their highlights of that meeting look like. And then we talk throughout that entire process. When I'm communicating with the realtor and I'm communicating with the clients on the weekends and we're all on the same page on what that offer is going to look like, my pull-through ratio is insane.
Well, let's talk through some of that. So what does that look like on a weekend when someone says, oh my goodness, I went to this open house. It's a great place. Probably going to be multiple offers if we're talking the spring market like we are. So then what?
So the number one thing is, and again, it depends on who you're working with that does this, but when we're going through, the number one thing that I'm looking at is the financial strength of the buyer, right? The buyer might only want to put down, my client might only want to put down 5% or 10%, but I'm asking them for everything. I want to see how much liquidity they have on the sidelines. Do they have the capability of getting a gift? Not because they're necessarily going to put more down, but I can tell you right now in Chicago, unless you're going to like a high rise in the city where the inventory is a little bit more plentiful, like I can tell you that a 5% down pre-approval letter going into an offer versus a competitor that's got 25 to 30% down or 20 to 25% down, you're at a disadvantage right there off the bat because you just look financially weaker.
But what if I'm only planning on putting 5% down?
So the nice part is when we put an offer, when we put a pre-approval letter together and we verify that you have the ability to put down 20 or 25%, That's really what we're telling the sellers. You have the ability to do that, and we verified that you can. Now, once you go under contract, we turn around and we, the sellers don't see your financing all the way to the closing table. So as long as everything falls into place perfectly and we don't have any pitfalls with appraisal or anything like along those lines that would come up, you can go back to that 5% down, right?
And I think it's really important to note here that at the end of the day, you need to put yourself in the seller's position. And what are the two things the seller wants? Number one, obviously price, and that's money. But I think what people forget about is the assurance that it's going to close.
Yes.
And that is really one of their, they would, and in some cases do, take less for the assurance. And I think that's where it comes into play. It's higher risk for the seller, or at least perceived, if they have an offer with 5% down versus 25% down. And I think to your point there, that is part of the conversations. I'm not saying you're putting down 25%, but you have the ability to, so that's what we're stating, which in turn makes your offer more appealing to the seller because they have more confidence that you have the ability to close as opposed to falling through and then putting it back on the market.
And that's one component. The second thing that I think is crucial, and again, I've got all the realtors I work with love this. I think if you talk to most listing agents out there, they love this. But having me as the lender making that phone call to the listing agent right when your offer goes out, I think that is one of the most important things.
Why?
Well, it goes back to what you just said. It's getting the seller comfortable with the team that they're working with. You might be competing against a big bank that's out of state, or you might be competing against an online lender. Like, there's some nervousness around that. And like Tom said earlier, it's not always about the highest offer. It's about who the seller feels going to execute the highest level and get you closed. Like, I think a seller would be, a buffoon to take an offer that is $50,000 higher with a no-name lender that they've never heard of before, out of state, and all the complications that can come along with that, versus someone that's local and made that phone call and got them at ease. Maybe it's $25,000 higher, whatever the case may be. The sellers just want to know that you can execute and close because they've got plans to move on to something else too. And to have something derail that transaction is paramount in most cases.
I agree. And I think that's one of the things that's really overlooked. And a lot of buyer agents don't necessarily bring up or have you call or have, my agents do as well. But I think that is key in a number of different reasons. One, obviously, as you mentioned, giving assurances. But the other thing, for whatever reason, a lot of time the listing agent is willing to talk a little bit more to me as the lender. And sometimes they give away things, or they let you know what they're looking for, what they want, how you may be able to win the deal. So if you're working together as a team and that call is made, there's a higher probability that you're going to get the deal just even because of that.
Yeah, I had a situation last year. We had a spring market, and we had a client that made an offer on a place and had 35 offers on it in Mount Prospect. Can you believe I was the only lender out of 35 offers that went out that called? The only one.
I do.
And we didn't win the deal. We lost to a cash offer, but the listing agent called me and said, I loved your team, me, the agent. I loved the phone calls. I love the communication. If this deal doesn't go through on the cash offer, you guys are next up in line. And I'm not sure we were even the highest, but I think the sellers knew and the listing agent knew that we had a good setup.
Professional, and they're confident you're going to close.
Yes. So, the other thing about calling that listing agent is if we know the listing agent, our
relationship,
our odds go way up. I mean, you and I know the one with Jen that I was at my wedding, and I called as I'm like literally walking down the aisle, and there was like 30 offers on that place because I knew Jen and she knew how we operated and like how we worked. She said, hey, my sellers are going to go with your offer. And I also threw the plug in that I'm getting ready to walk down the aisle to get married. So
that probably helped a little bit.
Right. So,
but it was the comfort, once again, in knowing what they're dealing with and having that confidence that you're going to get to the finish line.
Yeah. So those are probably the easiest and top two things that we do to win at a high level. What's something else that you talk to your clients about at that buyer consultation as far as like tactics and strategy? And guys, keep in mind, we're bringing these up. not all of these are going to fit everybody's situation. We customize these to your situation. If you don't feel comfortable doing any of this stuff, it's fine. But we're going to at least try to add some of these bells and whistles into the picture to help you have a more a better chance at winning the deal.
And again, I think a lot of this comes up through conversations and understanding and recognizing and kind of going from least risk to most risk, because I think both of what you've said are very low risk. Having us call, even just putting on there what you have the ability to put down. I think the other thing is listening to the sellers and where they are in their situation. So if they're under contract for another property that's closing in 3 weeks, well, we better be closing in 3 weeks.
Yeah.
If they're under contract and closing in 3 months, well, let's cater the deal to 3 months.
So flexibility with your time, that's a big one. And, that's something that, I think every agent out there should just, and a lot of mine do already, but they should ask that question. What is really important to your seller? If it's that 3 week time frame, great. My lender can execute and close in 3 weeks. If it's 3 months, great. My lease isn't up until June, so I'm in a good spot. I'll give you guys 3 months.
Or if you've talked about it, I've got mom and dad that I can go crash for a month if need be.
Yeah, having that plan B in place is important too. So I think that's a really good one. In some cases, you'll find that the sellers need to close a little bit faster too.
Yeah.
And so, but they need to live there for 30 more days, right? And so that's called a lease back, where you basically close on the property, you own it, and then the sellers want to rent from you for 30 days. They can do it up to 60 days. Now, if you're in a multiple offer, you're going to probably be offering like a free lease back.
Well, another tactic.
So it means you buy the place, they live there for another 30 days, and they don't pay you anything, but they have to be out by such date. Yes. So those are some pretty easy ones that we can get around and accomplish. What are some more that you work on?
Well, we start getting into contingencies. And contingencies, again, going back to not the price side of things, but can you get out of the deal? And there are a number of different contingencies in there. The first big one is basically through attorney review, but it's really the inspection. And so the fear is, and first and foremost, my belief is you should inspect every property that you're looking to purchase because you never know what's under the hood. However, as part of the contract, you can say you're going to take it as is. And as is means you're not necessarily going to go back and, I'll say nickel and dime, but unless it's something major, you're good with it. And I think that is something that has almost become commonplace, especially in the spring. When you're going to these properties, you're not going to ask them to paint the scratches on the baseboard or, there's a certain wear and tear that the properties come across, and you have to understand that.
Yeah, and I mean, there's a section on your contract that says you can do as is with inspection.
Yeah.
So it's honestly the dumbest thing, but it makes sellers feel better. But you can go as is with inspection, and it just means I'm going to have an inspection. If I don't like it, I'll back out. I'll back out and get my earnest money back. But I'm not going to, like Tom said, go and say, hey, the baseboards need painted. There's some scratches on it. If there's a major item on there, like the furnace is getting ready to break down or something along those lines. Roof foundation. Those are some things that will probably be discussed with the attorneys. But I think every offer should, for the most part, unless it's a dump of a house that you're buying, should be as is with inspection. Just because you still have the ability to back out. And if they don't want to play ball with you during the attorney review period and get any sort of updates made that you want done based off of what your inspector's telling you, then you can just back out and move on to the next.
Yeah, absolutely.
Right? So there's another one that's really easy. And, going back to my story I told at the very beginning of the show today, my wife and she wanted to call the search off, right? So, I said, look, you can't fall in love with the place till it's yours. There's a second one that I'm going to tell you that's my number 2 rule of thumb is the following week, a place came on the market. And it came on a Thursday, right? And we ended up going in for a private showing Saturday morning. And before we even got there, we had the contract written up. So we knew that it checked about 70 to 80% of the boxes. And so we wrote that contract up. And as soon as we walked out the front door, we hit submit on the offer. And that following Sunday, they had an open house going on, which is a lot of times you don't want it to get into the open house because that's just traffic coming in left
Competition.
and right. Competition, what we talked about earlier. It's the feeding frenzy in the spring market. So during the open house, they turned around and they counter offered us, which was like mind boggling because you would have thought they would have let it go through the open house, but they counter offered us. We accepted their counter, and on Monday, there was like 8 offers that came through.
Wow.
So another one of my rules of thumbs and a tactic here is don't think about it. You're in the spring market. If you think about things,
Too
even
much.
for a day, you will see that property will have multiple offers on it. So we got lucky, but sometimes that offer right out of the gates, a strong offer, no contingencies. We did a lot of like things to sweeten it up to get them to accept our offer, will be the offer that they look at and accept right away because it just so happened that the sellers of my place are moving to Texas and they needed to get out. So they were just looking for that strong offer that came through.
And there you go. You got it.
So there was a lot of pissed off people on Monday when it came around and they told her they said we already accepted an offer. But guys, that's happening right now. Like I have a place across the street from me. It was a teardown of a bungalow and they built a big single family. It didn't even get to the market.
Yeah.
So, and that was in January. That was in December actually.
And not that you should rely on it, but I think the most important thing is understanding that you need to get the place first.
Yeah,
Because
make
if you
it
don't
your
get
choice.
it, yes.
Make it your choice to back out. Like that's what we did. Like they accepted our offer. Now I went through an inspection still. If I wanted to back out, I could, but I didn't have to go up against other offers. If I'd have been in the middle of eight offers on our house that we're in right now, and by the way, we like this house way better than the other one. So another thing to keep in mind is if you lose one, there's another one coming. But we would have probably had to go $50,000 to $100,000 over list price to win the deal. So just know that like don't think about it. Sometimes just making the offer right away, coming in strong,
Getting the deal accepted.
getting the deal accepted is a big deal. So let's move on to a couple that are a little more riskier, but will put you in, I think, a category of competing with cash offers out there. Because that's the reality of it is like when you probably look at a lot of these cash offers, I don't think all of them are cash.
No.
I think a lot of them are cash with the option to finance.
Yeah.
What does that mean?
Well,
Depends, right?
Well, it does depend, and I think every situation is different. I think when you talk about risky, there's like 3 different risks essentially, and I think the first is obviously the value of your property because that could come back, and so that's where we talk about appraisal waivers or appraisal gaps.
Yep.
And then I think there's the potential that you can't get the mortgage, which is the mortgage contingency, and I think that's also a big risk. And that's where these quote unquote cash offers come into play because they're essentially eliminating all of that by going cash or cash with the option to finance. What they're essentially saying is, I will buy this property. I will not, again, going back to getting out of a deal or a contingency, it's essentially waiving that contingency that you will pull out as a result of the financing. And that financing, generally speaking, is anything with regards to being able to get the mortgage, which is your income, your credit, and or the appraisal.
So, and I think there's 2 components on it. There's a straight cash offer that you're making, and then I think either way you slice it, if you did back out, you stand a chance on, or there's the option of, getting a mortgage on top of it. You're basically telling the sellers that, hey, I have the ability to pay cash, but I'm going to go for my mortgage because I trust my loan officer. Either way you slice it, you back out of that deal. You're putting your earnest money on the line for the most part.
At least the earnest money for sure.
At least the earnest money. Potentially, you could get into some lawsuits if the sellers really wanted to do all that. But when we have someone that says, "Hey, Mike, I want to waive my mortgage contingency," I'm good with it. But there's also some things that we have to talk about. One is, are you in a position right now to lose your job? Because if you lose your job, I need your income. That could derail us. Number 2 is if you're buying in a condo building with 5 units or more, we have to do a little due diligence on that condo building to make sure that there's not any issues on it that could derail your financing, meaning that there's not any litigation, there's not any like major structural issues going on, city code violations, things of that nature, because that could put you in a bad spot and you might not be able to get financing as a result. So there is some strategy and some things that we have to talk about when you opt to waive your contingencies on your loan. But it will put you in the category of competing in cash. Sometimes it's just a matter of saying, hey, you got husband and wife. We got both of your incomes in the picture. How do you guys feel about your job? Well, I feel great about my job. I feel great about my job. Good. Well, guess what? If you lost your job, husband, we can still qualify on wife's income. So as long as both of you feel good about your jobs, I think we've got a good deal here to waive your mortgage contingency.
Well, I'll take it one step further, right? Because this is probably the biggest contingency and the biggest reason people get or don't get properties, if you will, is as a result of the mortgage contingency and the fear that they won't get it. But I'll ask you this. What happens if someone self-employed, quote unquote, loses the job that they're working at? They're self-employed. There is no job to lose.
Yeah.
If you've already pulled credit and they've got phenomenal credit and you've already verified the assets for the down payment, the mortgage contingency is really just a feel-good thing for the property.
Yeah.
Because the reality of the situation is there is no job to lose. You're self-employed. So that is a big thing to understand as someone that's making an offer in a competitive market. That mortgage contingency outside of the appraisal per se or the property itself is pretty much useless, but it is a huge thing for the seller and can really give you that competitive advantage.
And that might not be for you. Some people just don't have the risk appetite for that, right? So, the next best thing I think you could look at doing is, waiving your appraisal contingency, right? And so what that means is that, especially if you're putting down like 20 or 25%, like 5% is a little dicey to do this on because you may have to come up with more money. But if you're putting down a 20 or 25% or even 10 or 15%, we'll talk through waiving your appraisal contingency. That just means that you're telling the sellers you're not worried about the appraisal. Like even if it comes in low, like you're okay like with your finances on where they're sitting at right now, that it's not going to really impact your loan all that much. And what that means is if you're putting down 20%, let's say it comes in 5% light, you might have to pay a little bit of PMI on your loan. It's not like you're gonna have to come up with that extra 5%. And that's where people don't think about, again, not knocking the realtor at all, but the lenders and realtors just think differently. So we're looking at the financial aspect of it. They're looking at the property for you, and they're looking at the things that you could walk into that could cost you a lot of money down the road. We're looking at how do we make that offer with your finances that we've already verified, with everything that we've looked at so far.
And I'm going to take it one step further, which again, this is going to bring it back to what we started with, is getting everybody involved, because there are situations where we get involved when you're putting in the offer. We may not require an appraisal. Now, we're not necessarily going to advertise that, but now, again, mitigating the risk, but making you more competitive, we could waive that appraisal knowing we don't even need one in the first place and put you in a driver's position to get the deal.
Yeah. Just see if I missed it. I think the only other one, and again, guys, like, I want you to know that these are just strategies and tactics to win at a high level. Like, they may not fit you, and it's okay. I've actually had clients that have said, you know what, I'm getting out of the spring market. I'm not going to buy in this market right now.
Too stressful.
Like, I had an attorney not too long ago. He was an attorney. He goes, you know what, I'm putting my search on hold. It's not for me. And that's okay. We're never going to do something that's going to put you in a bad spot, but we're going to talk through these when we sit down and meet with each other and run through the plan and talk about that at that buyer consultation, talk about what it takes to win. The last one that we're going to hit on today is, and if you can get it, it's great, but it's called an escalation clause. And basically the way that looks is, let's say a place is listed at $700,000. You and your realtor could go in and make an offer at $700,000 with an escalation up to $750,000, and we'll give $5,000 over your next best offer. So if it comes in at $725,000, you win it at $730,000. There's hit or miss on whether you're going to be able to do that. A lot of times listing agents will tell you no escalation clauses. You can still submit one even if they tell you no. It's still an offer, but we see that it just prevents you from having to go way up on the spectrum to make that offer and kind of feel out what the next best offer looks like. And they do have to show you that next best offer.
Yeah.
So we don't use it a ton, but there's a couple others that I have I'm not going to talk about today because they're just too confusing. But again, this is why you don't push button, shoot rocket, and get mortgage. You have to plan. The spring market, in my opinion, is it's one of the markets where you're going to see the most inventory come out, new homes on the market, but it's also the toughest. So just having that, like, tight-knit team behind you, whether it's me or you, or whether it's whoever else you've been referred to. Getting referred to somebody that your friend or family members had a great experience with, typically the best way to go through this process.
I think it's like anything else. This is the biggest purchase of your life, more than likely. And so preparation is key. And so preparing and getting everything ducks in a row, the right team on board with you, and making sure you're comfortable with those next steps is the key. And so, there's no time like the present to start that process if you're looking to purchase in the spring, because the sooner you can get that put in place, the better you're going to be as you approach the market.
Yeah. And the only thing you didn't touch on is, when does that spring market, what's that window it goes through? So buyers are prepared and know what that whole picture looks like.
Well, the best time to get prepared was yesterday. But the next best is tomorrow. I think there's no reason why you wouldn't get sooner as opposed to later, just to make sure you do have, there could be credit issues. There could be issues as a result of maybe changing jobs and counting or not counting bonuses. And so the sooner you can get that, and then from pretty much that point, I would say that from a spring market perspective.
So the time frame's like March,
April.
March, April is when it kicks in, and then it goes all the way till about July 4th.
Yeah, that's when we hit the summer, which is usually a little bit of a break, and then start back up for the fall.
I think what Tom was saying was the sooner you can get prepared for it, the better.
Yes.
Because it's going to put you in the best position to win when you find that place. And so, spring buyers that don't wing it and get prepared have a much better chance of landing
the property they want.
that dream home that they're looking for. So, guys, we are now on Spotify. We are on soon Apple Podcasts, I think, here soon. And you can follow us on Instagram and YouTube. We love helping people get into homes. We love strategizing. We are very creative when it comes to this. You have to work with people that are creative. And that's just not lenders. It is realtors as well. Your realtor has to be on top of their game, or you will be one of those people that it takes 2 to 4 years before you finally get into a place. Or you'll be that fall or winter buyer, and that's okay. Everybody's got different thresholds for risk. Everybody doesn't, not everybody likes to be in the competitive market. So, but these are just some things that might help you while you're going into this year's spring market.
If you have any questions or we missed anything that you want to comment below, I'm more than happy to address it again. But at the end of the day, Happy New Year, i.e. spring market. Here we come.
All right. And, just for you, I didn't think I said at the beginning, but I'm Mike Black.
And I'm Tom Merritt.
And we are More Than a Mortgage.